Travillian Next is hosted by the Travillian Group. Please visit www.travilliangroup.com to learn more about our specialty in the placement of board members, C-level executives, and other professionals from the crossroads of community banking and fintech.
Welcome, everybody. Very happy to have a special guest on this Friday afternoon in January 2021. I'd like to welcome Jeffery Kendall from NYMBUS, the new CEO of NYMBUS. Welcome to the show, Jeffery. I know you're coming up on, 90 days, 120 days? How's it feel?
It feels great.
From the fire hose, huh?
Exactly. So thanks for having me on. I'm a longtime listener, first time caller, I guess, is and so
good analogy.
fun to be on with you. So appreciate you taking the time as well.
No, great. And we've been fans of NYMBUS for a while now, and we know people over there, and one of those innovators who are partnering with banks, community banks, credit unions to really help them in this digital age. So heading into 2021, after a pretty volatile 2020, to say the least, I think we're entering a new phase of digital. What do you think, Jeffery, are some of the biggest challenges banks are having right now? Some of the biggest issues they have to conquer in 2021.
Well, you talked about a new phase of digital, which is an interesting choice of how to frame it. And whenever you talk about something new, you can't talk about it being new without referencing the past. And the way that I kind of look at this is, I think we're in digital 3.0, right there or about to enter into it. And when I think about where we are, I sort of frame it up as, digital 1.0 for banks. It kind of rolls back 10 to 15 years. It was the advent of online banking and being able to do internet banking. And then toward the end of the last decade, getting into mobile banking. That was sort of what launched what I think is true digital banking at that point when mobility came into play. And if you look back to 2007 to 2010, that was really 1.0 for banks. They were scrambling to figure out how to do mobile. Everybody was all about, how do I get a mobile app out? And the money center banks led the way. And the smaller community banks and regional banks and credit unions had to kind of follow suit. So it was all about just getting it out there into the hands of the consumer. And then toward the end of, probably in the 2016 to 2018 point, digital 2.0 was there, which is people were sort of, it wasn't just about having an asset out there. It was about having a great looking, a high fidelity, great user experience in terms of the digital properties. Because early on in mobile, when you look back at apps that we used 10 years ago, we don't really notice how they've evolved over time.
True.
But it's almost laughable when you look at the first apps that came out on the phone, how bad they were. So everybody was investing tons of money into, customer engagement, customer experience. And that was, sort of the focus du jour. And it was the right one. But I think people have now gotten to largely banks and credit unions have usable tools to be able to serve their customers. But I think where we are now in digital 3.0 is that people are sort of going, we were focused on digital from self-service and thinking about how to create operational efficiencies and making sure that users had convenience. Mm-hmm. Now I think CEOs of banks and credit unions are saying, well, how do we use this to help us grow? Right. So now it's about growth of the actual business and saying, all right, our digital folks have been telling us for years, this is so important to our business. Now what's next for it? And the real opportunity is how to use these tools to sell to new target segments and to add new products to cross-sell to your existing customers. Those are the basics of any business. And that's where I think digital 3.0 is going to be focused on how to actually move the needle in terms of top line and gross margin for banks. So
yeah, no, digital 3.0, that's a good name for it. And highlighting kind of, you were talking about apps or some of the pioneers in digital banking, mobile banking. There was big news, I think, last week that Simple Finance up in Portland, Oregon, is closing, not being sold by BBVA, who was purchased by PNC, at least the U.S. assets. And I keep reading that they were kind of the pioneers. And can you describe kind of the failure of Simple, if that's the
Yeah.
right term to use? Okay.
Yeah, I absolutely. I think, when I look at it from a perspective, number one is Simple was such a fantastic approach and company, and kudos to the leadership team and the people who built that brand, because it was the first digital, sort of, pure digital bank that was out there from a mobile app perspective. And I even remember, it's probably been 6 years now. I signed up for account. I was really excited about it. I used it and really enjoyed the service. And I think that they were successful first because they were really tapping into the consumer attitude of people wanted convenience and change.
Mhm.
And at that point, the big banks and most of the regional and community banks were still behind the times and sort of self-service and digital. So that was really their appeal to the masses. But what changed over the past 5 years is that the rest of the banking market caught up in terms of
Mhm.
capabilities in digital. And what Simple didn't do was continue to innovate on the actual products and the hooks that were used to attract customers to be banking customers there. And so I think it was a missed opportunity. And my
Mhm.
guess is it probably was the victim of an M&A transaction that now looks
Yeah.
like a three-way transaction, which can hurt and destroy companies. But I think at the end of it, it wasn't. They just didn't continue to evolve once their value proposition got met by the
Yeah.
rest of the broader market.
Yeah. And you see that often. How can banks get ahead of kind of that evolution and reach new growth opportunities so
Yeah.
they don't become, I don't want to say irrelevant, but fall behind?
Well, I think that we're with the conversations that I'm having with CEOs of banks and credit unions is, look, growth, when you're thinking about how to go grow, most regional banks and credit unions historically have thought about growth in terms of acquiring new customers in their geography. And what's happened now with the availability and the cost of digital going down is that if you were a regional bank or a community bank 5 years ago, you have new tools that are in your arsenal to be able to go after customers in other geographies
Mhm.
and really target specific groups of people. And it's what we call niche. So I
Yeah.
live in Boulder, Colorado. And if you think about, if you were a local bank in Boulder, Colorado, maybe, Boulder Community Bank, your viewpoint of what you could grow to was really limited towards the people in that community and that community only.
Yeah.
Now, instead of thinking, when I think about having a bank relationship, it's not just based on geography. It's based on more of my needs as an individual and more
Mhm.
holistically as a person. So it's not enough to just have a geographic focus anymore. You've got to start thinking about, how do I appeal to customers beyond just where they live? So you think
Mhm.
about things like hobbies, right?
Mhm.
You could imagine a bank that tailored to, I'm a huge motorcycle rider and fan. I love motorcycles. Think about marketing to Jeffrey as a motorcycle rider versus a Boulder, Colorado resident. And that
Mhm.
creates new opportunities to think about new product offers to me, new acquisition strategies for that. That's really where the growth lies. And there's
Mhm.
no limit to what sort of concepts can be to, from a banking perspective, to appeal to a niche audience or segment. So, you
Yeah.
know, you think about a bank targeted at people who are gamers, or banks that are targeted towards religious or political affiliations.
Mhm.
We've seen this in the past, right? The whole idea of affinity marketing through cards was
Mhm.
something that was pioneered years ago. It's like, if I'm um, an Indiana Pacers fan, I might have my Indiana Pacers credit card, and that's been successful for years. Now you can actually take the whole bank and create an affinity strategy around the full services suite of banking products, not just credit cards. That's really the evolution that people are seeing now.
Oh, that's great. And you mentioned affinity marketing. Why do you think that's so important for financial institutions right now, beyond kind of what you said before? Is that kind of going to be the future? Using data analytics to kind of have groups and customer segmentation and really understanding your customers so you can market to them in the correct way.
Absolutely. It allows you to create more targeted and meaningful product offers for your
Mhm.
customers. It's very simple. if you have a broad audience of 50 million people, but there's nothing that really connects them, it gets hard to think about differentiated products and services because you have to cover such a wide group of your target market. If you narrow it down to a very specific segment, then you can be sure that your product creations are meeting the needs of that segment. We have a customer that we built a digital bank for called BankMD, and their focus is on physicians and namely people who've graduated recently from med school. Well, that segment, by going in and saying, hey, we're going to create solutions that are particularly relevant to that particular segment, has allowed them to create products that very, very tightly align with the needs. So you think about somebody coming out of med school, they will be a high earning, income at some point, but maybe they're not now. So if you know that about your market segment, you can offer high loan to value mortgages that maybe a normal bank wouldn't lend just in general to the population. You can offer products around student debt consolidation, which we all know is a big problem for folks coming out of med school. So they've really, really got the strategy down because they can focus on this particular market and create, laser focused products to be able to deliver to that segment. And that's why it's so successful.
Yeah. No, I read actually a poll today or a review that said 55% of retail respondents say they get information that's irrelevant to them on the website. When they go to their page, or just irrelevant. Maybe they're younger and they get stuff for retirement, or maybe it's the opposite, college loans when they're nearing retirement. So I've been reading about that a lot lately, and that's kind of the next phase. And that all comes with data, understanding your customer, analytics, and be able to offer your customer exactly what they need at that exact point in their life, which is that's crucial, I think. You see it with other websites, Amazon, or very distinct. You go on Amazon, you bought a grill 2 months ago, and they're like, do you need new grill gloves? Or they just remind me, oh yeah, I do need that. And it's just kind of taking that into your banking world and offering the products that are relevant to that specific customer.
That's right. And I think, when you think about what makes digital capable, I always think in terms of what are the systems that are enabling digital in banks. So you have systems of record, which are your core processing systems where the data is stored. You've got systems of engagement, which are your apps, the tools that are in the hands of your consumers that keep them connected. But one area where I think is emerging is this whole concept of systems of insight, which is just because you have a data repository and just because you have engagement tools, that doesn't necessarily tell you what it is about that customer that is a particular pain point or problem or opportunity to solve for them. And so if you think about, AI and analytics and that piece of it, I think that's a very, very strong growing segment of fintech that's going to be, very, very relevant over the next 5 to 10 years. Because where I think we are as a market, we don't even really know the right questions to ask. Yeah. When I talk to banks and credit unions, a lot of them are like, I have all this great data. I don't know what I don't know about it. Right. And so helping banks and credit unions have access to just within their own data and to create those insights and say, you should do this because the data says that. That's where a lot of work is being done. And I think is going to be the next big transformation going into digital.
Yeah. These banks, all banks, smaller banks, big banks, they're sitting on gold mines of data.
Absolutely.
The bigger banks are obviously utilizing a lot of that data with technology. The smaller banks, just like you said, don't know what they don't know. And there's such valuable insights. I came up through corporate finance. Analytics was our core, and we never made a decision without looking at the analytics. And you need both. You need kind of that Moneyball model, I like to say, where you get the analytics and the old time scouts together working towards a common goal. And I'm a big believer in that.
Yes, absolutely. And as a small plug, you brought this up and it wasn't planned, but we'll be hosting a webinar at the end of February with Billy Bean
Oh, wow.
From the story and what happened with that movie Moneyball. He's the
This wasn't planned, and that's one of my favorite movies of all
yeah.
time. I read the book a couple times. I'm just amazed at how smaller, and I think it's really relevant to community banks today. I look at community banks, a lot of them as the Oakland A's, and then you got the Dodgers and the Yankees, and hopefully my Mets now, are the Bank of Americas, the Citibanks. And you can't
That's right.
compete. You can't compete on payroll or digital investment. So you have to find new avenues to really compete. And a lot of those teams are doing it. Tampa Bay, Oakland are doing it, and they're doing it with data analytics. So speaking of talent, which is our passion here at Travillian, obviously, working with community banks, executives, fintechs, digital banks. Tell us who in the C-suite kind of needs to have a seat at the table when they're, going through a strategy for digital initiatives, and whose role is it in the organization to really lead that effort of digital transformation?
Yeah, no, that's a great question, and I don't think there's a 100% right or 100% wrong answer to that. But what I do see sort of evolving when it comes to digital is that initially, as banks were expanding their capabilities for mobile banking, online banking, et cetera, that sort of the natural place to look was to IT and to the CIO or maybe even the CTO.
Mhm.
And because it was technology, because it was new, people focused and said, well, maybe this is a decision that needs to be led by the CIO or the CTO. And when technology is very, very early, that makes sense. But as it becomes more commonplace and sort of dependable, reliable, and those sorts of things, I think that invites other C-suite executives to, it makes it necessary for them to be at the table. Mm-hmm. So if you're talking about creating a digital strategy for growth, you can't just have IT at the table, deciding what that approach is going to be. You've got to have marketing, you've got to have strategy, you've got to have finance and operations, because it cuts across the entire operations of a bank and the mindset of a bank. And so now what we see, and I'm really happy about this, is that over the past 3 to 4 years, as we go in to talk to banks, conversations about what they're doing in digital, I've seen it transform in terms of the people who are at the table. And it involves marketing a lot more, because the natural question of how do we grow, that's a marketing and strategic question from a bank perspective. And so if I'm the CEO of a bank, once I hear the word growth and strategy, I turn to my marketing team. And now once you've coupled digital and strategy together, that's where the real power comes together. So it's not saying that anybody at the table is less important or shouldn't have a seat, but before it was almost exclusively IT, and now it's a broader conversation. And I think that's really important. If I was a banker looking to hire positions in my executive management team, I would be, very, very focused on making sure that people were bringing digital and growth strategies along with their experience, regardless of what function they're in. And I think that's really key. Even in your people and your talent leaders, having somebody who's well versed in what digital means for your employees, for your staff and your talent, that's even relevant. And so it shouldn't be overlooked for any position in my mind.
So the entire organization.
Absolutely.
From entry-level analyst up to chairman of the board.
We used to think of digital as sort of this thing that was distinct and outside the rest of the bank operations. But it's just like sort of computers and technology in general now it's just part of the fabric of what we do and how we do business. So even talking about digital as a thing feels sort of maybe outdated. Because everything's digital now. There's no, how much of the stuff is not digital? It's tough to point to there now.
Not much. I actually bought my first record for the first time in like 33 years the other day. I bought a record player just because I want to kind of just experience maybe how it was back in the past. So there's not much. You got the nostalgia stuff, which is non-digital, but
it's funny. For my kids, for Christmas, shopping for them, there were 2 things that I was looking for in December to buy them. One was a record player, which was almost impossible to find because they're so popular again.
Yeah.
And the other one was a chessboard. And that was, you think about an old school gift or something
Yeah.
because of the success of, Queen's Gambit and some of the Netflix shows and things like that. Chess became so popular that they were hard to get a hold of again. So,
yeah, records.
hopefully banking doesn't go retro anytime soon.
I can't see the banking going that
back.
way. I don't see people going back to the old days of banking. But records actually outsold CDs for the first time in 30 years. I think they said last year.
That's an interesting data point.
Yeah. So we're moving in that direction. So Jeffrey, what's next for NYMBUS? I mean, there's a lot going on. I see you in Forbes. I see Billy Bean on next month. What's next?
Look, I think we're, number one is the fintech market in general. It's almost cliche to say that it's it's relevant and growing, and everybody knows that. But even just the first 2 weeks of this new year that we're in has demonstrated, number one, there is a huge appetite for the investment community to funnel money into fintech. You look at valuations from MX, Rapid, the list goes on and on. The big change with Plaid that's going on, which is really interesting. Number one is I think that bankers should be paying attention that how much of the money in the economy is going into what could be competitive with them. So I think that's something that we're looking at. How do we help banks and credit unions continue to navigate this on a long-term basis? It's not a project. It's not a one-time thing. It's a mindset. It's a state, you need long-term partners to help you go through there. And where we're trying to really focus on, if I think of NYMBUS over the next 2 years, it's not about just being a technology partner. It's about being a business partner.
Yep.
One of the things that we're very focused on, I think it sets us apart as a company, is when we do contracts and commercial, negotiations with our customers, it's all around shared risk and reward. So, we try to make our contracts so that we're not getting paid and we're not growing unless our customers are actually growing. And that's a new mindset for tech players. And I've been in technology for now, 20 plus years. And most of the time, the relationship is very focused on, hey, I sold you this software. It does what I told you it's going to do. Whether you get the great results out of it or not that I promised you in the sales cycle is your problem. We're trying to take a different point, which is like, no, we definitely have the tools and the tech. Now we're here to help you actually make sure you get the business results. And if we don't achieve those, we're not going to grow. And so we're motivated, and we share the same mindset to get to that growth for the banks and credit unions that we serve.
And that's actually the exact same mindset we have here at Travillian. We're not transactional. We want to be partners. We want to understand your business, your culture. We don't want to be just a one-time, we found you a chief compliance officer, good luck. Follow up, understand how their business is changing, become a real partner. And there's firms out there that are just vendors, which is fine. But we're specialized, and we're really focused on watching the NYMBUSes of the world continue to grow. And as you know, I mean, talent is, it's hard to find these days because, you need that mix of digital and banking. And it's an exciting time, I think, for everybody. To me, I think it's incredibly exciting time for the banking industry. Any predictions kind of I hate to say predictions now after last year. I mean, this time last year was January 15th. We're like, oh yeah, this is going to be great. But do you have any kind of predictions for 2021 for this industry?
Yeah, I think that there will be, interestingly enough, I think that we're starting to see a lot of the growth of new players in fintech, but we're also seeing the crumbling of a lot of the business models that are failing. And so I think we'll continue to see a net gain of fintech players, but I also think that you'll start seeing some of them drop out this year, because if there's just in the thousands when it comes to fintechs that are under 5 million in revenue. And so I think they'll starting to be separate more and more of that. I think for the next 12 months, I don't see any slowdown in the appetite of venture capital in terms of its interest in fintech. And the third prediction I have is that people are going to start valuing banks differently. Right now, if you're a publicly traded bank, everything comes down to net income and profit. That's it. And I think what assets like Chime and Varo and other high value digital banks are now bringing to the table is that there's valuation and enterprise value in banks and digital banks that isn't directly tied to profit. There's value in the fact that you have a massive base of users that you can monetize in other ways. And so it's sort of becoming more like tech, which is, Facebook got valued at early days on eyeballs. It was never valued on profit early in there. And same with Twitter and all the other things. So the tech community understands and appreciates that value is tied to number of users and consumers. That's where I think banks are going to start finding more enterprise value versus just focusing on profit. So those would be my top three.
No, that's great. That's good investment advice too.
Absolutely, yeah.
Add a couple of those picks to your investment portfolio. But you're right. Active users, number of minutes on the app, how many times they log in. I think banks have never had to deal with that before, but it's definitely a time to look at those type of metrics. But no, thanks, Jeffrey. This has been fantastic. Very excited to hear about Billy Beane. That's incredible coming up. And I look forward to speaking with you again in the near future, maybe in a few months to see how we're moving along this year. But a lot of momentum, a lot of high hopes for this industry. NYMBUS is rocking and rolling. So excited to see where you guys go in the next year or so.
Well, we appreciate getting to partner with folks like Travillian who have an interest in the community, the market segment. I think you guys are providing a valuable service for the banks and credit unions and fintechs that are thinking about talent and this big change that are coming up. It's very important.
We have a passion for the industry, and we want to see these community banks stay relevant and survive, over the next 5 years. And with partners like NYMBUS, you can compete with the Bank of Americas. And you don't have to compete on the balance sheet, but you partner with the right fintech partners. The sky's the limit, in my opinion. So, no, thank you very much. Have a great winter, and I'll talk to you again when it's warmer out there and the sun is shining. Thanks a lot, Jeffrey.
Sounds great. Thanks, Keith.
Appreciate it.